Good day, guys, and welcome to Traders Villa. All right, so in today's video, we are going to be looking at the seventh episode. Yep, I'm looking at my screen, my laptop screen. So I'm going to be presenting today's class using Google Slide. I don't know how to use it, but I'll try. Okay, because we are now entering into the session or the class series where you guys won't be needing to see my face that much anymore. Okay, so to be more of practicals doings, like we have a lot to do on the system and you guys got to learn along. Our today's topic, which is the seventh episode, is going to be candlestick anatomy. Right, candlestick anatomy, and stuffs are going to be seeing subtopic are going to be what is candlestick pattern, what is candlestick anatomy, history of candlesticks. So I have all these presentations right on my Google Slide. So I'm going to head over to my PC and show you guys what we are all about for today.
Hi, welcome you all once again to the seventh episode of our educational Forex class series. Okay, and today's topic we're going to be looking at candlestick anatomy. Okay, all right, now our subtopic are going to be what is candlestick, what is anatomy, history of candlestick, uses of candlestick, OHLC prices of candlesticks. We're going to come back to what's the meaning of OHLC, the acronym, what it means, types of candlestick, bullish and bearish, candlestick anatomy, illustration. All right, so we start off with what is candlesticks. And by the way, don't laugh. If you laugh, I will know. Okay, so I wrote all these things down here so that I don't forget the things I want to say. All right, because remember when I always used to tell you guys, it makes me to go Abraham Lincoln on you, right? Because there was a movie I saw. Abraham Lincoln usually writes out his speech in a piece of paper, and whenever he wants to give his speech, when he climbs the podium or something, he brings it out and reads, right? So I also got to find out about a quote that says, "Our brain is for generating ideas, not for storing them." Yes, and when you generate ideas, make sure you write them down. If you don't write them down, they perish. So if I don't write this down, I'll forget how to explain it just the way it was in my head at the time I was drafting all of this. Okay, so when you read something that is funny, don't laugh. Okay, all right, thank you. So what is candlestick pattern? From Google, I got this one from Google. Candlestick is a way of displaying information about an asset price movement. So I went here to say the above explanation is Google's explanation. Okay, so I try to gather another explanation, so it won't be as if I'm always using my own term to explain or teach you guys these things we are sharing with ourselves. Okay, so this one is from Google and it is correct, because candlestick pattern is truly a way of gathering informations, price movement, and everything happening on the chart for the last 4 hours, over the last day, over the last few weeks. You understand? So yeah, that's what candlestick patterns are for. So let me quickly show you. Yeah, so something like this. Okay, so these are the candlesticks. This red and green stuff you are seeing on the chart, they are called candlesticks. Then they are used for gathering these are prices. Can you see price? If you put crosshair on a particular candle, some numbers will pop out. Let me use crosshair. I hope it comes out very quick. It's blinking. Yep, yes, look at it. All numbers 4 to 9, they are all numbers. You understand? So candlestick, they are used for gathering all of those information. Okay, all right, so we come over to my own explanation. So over the years as a trader, I came to understand that candlestick is the language the market communicates in. All right, so I've been teaching for over 4 years, almost 5 years now. So I came up with my own explanation about candlesticks. Right, so candlesticks, they are like language. For example, you travel to France or you travel to Germany, whatever country you travel to, right? And you from an English speaking country, you need to learn how to speak German or French to be able to communicate with the people there. Or you find yourself someone that can interpret what they're saying. You understand what I'm trying to say? So that is how these candlesticks are. Look at it. So that is how these candlesticks are. If you don't understand what is going on here, you can't communicate with the charts. You understand? So this is the language that financial market is speaking to us, the traders. You understand? So I can tell you stories about this, just this board you're seeing here. I can tell you why sellers pushed the price down here, why buyers took the price back up, how it broke a resistance level, and all of those things. You understand? So those are informations that the market communicated to me because I understood what the market was saying. So I can interpret it for you. Understand? So you have to learn this too. Okay, so let's go over to our next subtopic. What is anatomy? All right, so anatomy is the study of structure. Anatomy is the study of the structure of living things. I went ahead to say, but let's leave it. It's the study of structure. Okay. Got this one too from Google, and it's correct. Anatomy is the study of human body stuff or anything, but now they said it is the study of structure, the study of the structure of living things. Now let's put it into combined term. What is candlestick anatomy? Candlestick anatomy is the study of the structure of candlesticks. Thank you. Clap for me. Yep, I can hear that. Right, so history of candlesticks. Candlestick originated from Japan and have been used since the 18th century. The very first person to use them was Ouma Nyoe-isa. Man is late. Yeah, but if I'm talking about a role model or someone I look up to in trading, this is the person I refer to always. You understand? Because for him to, be the first person to use candlestick pattern, man, God bless his soul. Okay, so the rice merchant from the country. The candlestick is an ancient form of price analysis in Japan and can be attributed to Stephen Nixon as its discoverer. Alright, so this is the person that actually I don't know if I should use I don't know if correct when I say he invented candlestick pattern, because they said the very first person to use them, the very first person, Oma. So this man should be given a lot of credit, because the work and the things that candlestick pattern is doing for us Forex trader is amazing. It's amazing. And yeah, so this man also that brought it all the way from Japan, that discovered it and brought it to the Western world, we say thank you, sir. All right, the use of candlesticks. The use of candlestick is basically to understand the price movement in the market. In other words, they are like the language in which the market communicates with the trader. Come on, Tosin. Yeah, that is Tosin's explanation. Okay, there you have it. So the uses of candlesticks, that is just basically the uses. You understand? We use it to, understand what is going on in the market, get our zones, rejection levels. You understand? Without candlesticks, there's basically nothing we want to do in the market except those that are using line charts and bar charts. But come on, how many traders use this line and bar charts? So kudos to candlestick 100, line chart and bar chart 0. All right, next on our list is OHLC prices of candlestick. So what is OHLC? OHLC is the acronym of open, high, low, and close price of a candlestick. So if you see a candlestick, all right, So if you see a candlestick, I would love to show you guys a quick diagram. Yeah, this is how candlestick is. This is the green and this is the red. just like here. Yeah, see the red, the green. Let me increase it so you see. So the green, the red, red. You understand? So basically, that's what candlesticks. So they have this price. You understand that they actually need to know how the price work. You understand? So that is what OHLC means. So every candlestick, not every candlestick, but most candlesticks, they have this OHLC. The O is for open, the H is for high, the L is for low, and the C is for close. You really need to know this. So if you are on this particular class, please get your pen and book, jot these things down because you are going to need it moving forward. This is what's going to make you some bag of, let me leave it there. All right, so types of candlesticks. We have the bullish and the bearish. That is the only candlesticks. That is the only two candlesticks we have in trading. So the bullish candlestick, they are usually green and they represent the bias in the chart. Bullish means the market is on a buy trend. Simple, like no long talk, that's just it. Bearish candlestick, they are red in color and they represent the sellers in the market. Bearish means the market is on a sell trend. So when you see a green candle, you should know, like the green candle, they always move upwards. So when you see them moving upwards, you should know that's a buy trend. When something goes up, buy in Forex. When it comes down, sell. You understand? So basically, that is what it is. So bullish can be called bull. It can be bull. You remove this ISH from it, just the bull. Yep, it can be called bull. Then bearish, remove the ISH, it can be called bear. You understand? So basically, that is all about the types of candlesticks, bullish and bearish. All right, so we move over to the next one. Okay, so now we're on this particular one, this last one here, candlestick anatomy illustrations. All right, so complete price, OHLC, open, high, low, and close prices. So this candlestick, this is the bullish, the green is the bullish, the red is the bearish. So this kind of candlestick, they have complete price, and I'm going to show it to you in a minute. Let me use the line. I know I'm going to have trouble using this line, I know. So you see this wick, you see this one here, this top here, this is called the high price. Okay, then look at this particular body here, it has this one here, so this is the close. Okay, then see this one here, this is the open. Then this last wick here, this is the low price. So the first wick here, it's called high price. This one here, it's called the close price. This one here is called open price, and this one here, the low price. OHLC: high, close, open, and low price. Capish? Then for red, here is high price. You understand? I'll explain this in a moment, but just come along with me. Here is high price, this week high price. Then here is open price for the red candles. Here is open price, here close price, and here is low price. Should I come again? High price, the tip here, high price. Here, this body, the beginning of the body here is open. Here is hand close. Here is the low price. OHLC of the red. So the difference between both of them now is that for the green, the high wick here, this tip here, is the high price. The H, that's this one, the H is the high price. This same place, this tip here, is also called high price. Those are the two similarities they have, what they have in common. You understand? Then for this place, the low price, here also That is the low price for the red candlestick. So here is low, here is low, low price. Then if you see this place for the bullish candlestick, it is the close price. Why is it the close price? Because the bullish candlestick, they open from the bottom and close above. They open from the bottom and they close above. You know they are always going up. So it starts forming from here and close above. You understand? Then for the bearish, they open from above and they close below because they are always going down. When you see a bullish market, a bullish candle, you should know the market is buying, going up. A bearish, you should know the market is sell, going down, it is selling. All right, so they open here and they close here. So the difference is green, the bullish, they have their open price at the bottom and their close price at the top. Bearish, open price at the top, close price at the bottom. All right, the only thing they have in common is their wicks. So this pin you see here, this thing that looks like pin, is either called wick. You understand? The wick of the candle. You understand? The wick. So it's called the wick. What is it called? It is called the wick of the candle. Wick. So this is the high wick, the high price. High wick, high price. Then this one, this pin down, is called the low wick, low price. Low wick, low price. So I hope that was clear. Okay, then we go over to, see, I named this one complete price. So go over to the ones that are not complete. So this is another type of candlestick without wick. They are candlesticks without wick. So they are different in structure. You understand? You can see some, they are not even as long as these candles. They are not as long as this. Some of them, they are here, they are short here, cut here. Some with, in short, you will see them yourself. So I'm just giving you heads up. So this, they have no wick, no pin here. Can you give me my line, please? Thank you. All right, so see, no wick here. So this kind of candlesticks, this kind of candlestick, they don't have the 4 complete price. They only have 2. They have the open, they have the open and the close. The open and the close. Easy. Do I need to come again? Open, close price, no wick. So just that 2 price. OC, open and close. Open, close. You understand? So for the bearish, for the bullish, the open is down, the close is up. Then for the bearish candle, the open is up, the close is down. So next on our list is the OLC. These are candlestick with only 3 price. Only 3 price. See, they have only 3 price. All right. Oh, come on. Sorry. Don't do that. I'm live recording. Okay, so for this type of candles that have only 3 price, you see what, something is missing here. Oh, come on, don't do that to me. Okay, so here you should all know what is here. Can hear you guys? Yes, the close price. What is here? Yep, the open price. God bless you. And here, the wick, low wick, it's called the low price. And for the bearish, here it's called what? Close price. And here it's called what? The open price. And why is it that? Because the green opens from the bottom and close at the top. Then for the bearish, opens at the top and close at the bottom. And the only thing they have in common is the wick, both high wick, but these candles, they don't have high wick, they only have low wick. You understand? So low price, low price. Simple. So these are candles with only 3 price. Don't stress me, delete once. Good. All right. Next, these are also with 3 price but no low wick, it is high wick. Okay, So I don't know if I need to explain, but let me just do that for the sake of it. And okay. So this is the open price, this is the close price, and this is the high wick, the high price, high wick, high price. But this place is the open for bearish, the close for bearish. You understand? So these are candles that don't have low wick. So you'll see candles like that in the chart. So why I'm doing all of this is for you not to think that, person told us that OHLC, open, high, low, and close price. Then why is this candle not having one of those prices? So, for future reference, so you don't get misunderstood. Is that all? Yep, that's all. So what I say here, few notes to add. Number 11, those are other way these candles can form, but they carry the same OHLC, only that the open and close prices are almost the same or little different. I made a mistake here. And number 12, a diagram showing the different ways these candles can form, but they have the same number of price with full body candlestick. With the full body candlestick, just the structure are different. Oh, okay. Oh, wow. Sorry, guys. All right, so you see candles like this. Like I told you, they are different. They have different structure. See, just look like a T, or you can say like a cross. You see them? So when you see candles like this, you'll be asking, where is the open price and where is the close price? Well, the open price and close price, they are almost together. See, here is the close price, and here the small place is the open price. So they are almost the same. You see it? But this is the weak, high price, low price. So in case if you see candles like this, you know what to think already. See, high price, low price. Then look at here. Here is the open price, here is the close price, but they are almost the same. Okay. Okay, yeah. So that was what I said here, right? Number 12, a diagram showing. Okay. Yeah. You see, I almost forgot, but thank God I wrote it down. So these are like the diagram of different patterns, like different information. Look at this. Big, complete. This one has complete price. This very one, it has complete price. This one does not have full body, but when you put it on the chart, it has complete price. But the open and close might almost be the same number. They might almost be the same price. Look at this. So they are all different formation. Look at this, different formation. Get, and there are some that don't have high wick. Look at this, no high wick, only close price, open price, and low wick. And so in case when you see candle, look at this one, this, you see, so they have different structure. So when you see them, don't get confused with the prices. Just know that this candle, does not have high wick, so it has only B price. So you know how to structure out the price. So guys, that brings us to the end of today's class. And there's something I wanted to add, but I don't think there's any need for that. But let me quickly do it. All right. So this is a live chart. All right. So we get our crosshair. Look at this price here. Look up here. You see this place? Yes, this place. So now this is what I want to tell you guys. The first number here, 4135.510, that is open price. So wherever you see them like this, they always correspond: open price, high price, low price, close price. So the first number is open, the second one high, low, close, OHLC. So even if you go to another chart, even if it's currency pair, it is the same thing. Wherever you go, as long as you see the number lining up like this, the first one is always the open price, second one is the high, third one is the low, and fourth one is the close price. Okay, so let's check this out. Look at this particular candle, this one. Look at what pops up after the date and time. Open price, 4195.78. High price 4211.114. Low price 4161.077. Don't go away. I'm on a live class. Come on, respect yourself. Damn. Close price 4189.016. You understand? You see, it came out the same way: open, high, low, and close price. So now if you want to see this very number I called now at the top there, leave it here. No, sorry, not at the top there, to be at the bottom. To be at the bottom. So I need to, use like the arrow to point it out. See it? Yep. So it always comes out as the open, high, low, and close price. Let me show you guys something. One last thing. Look down here. After defaults, after dates, look at OHLC. Let me put it back at that candle. Yep. Open at the candle's body here is 4195. Look down. O 419578. Look up 419578. I 4211.114. H 4211.114. Low, low. So you can pause and make reference to it and say they are the same thing. So you either see the price at the bottom, or you see the price at the body when you use the crosshair, or you see the price at the top. Yeah, you understand? Yeah. So these prices, they are super important. You understand? If you want to become a price action trader. All right. So thank you all. God bless you guys, and see you all in our next class.